Warren Buffett, throughout his investing career, has achieved an annual average return of 20.9% compared to the market's average return of 9.9%. Now, this may not sound like much, but if you take into account compound interest, Buffett's cumulative return was 2,404,748% compared to the market's 15,508%. This is all because of compound interest. And I won't be explaining compound interest in this video. What I will be talking about is Warren Buffett's current portfolio. We'll look at some of the stocks that made him rich and the stocks that he has picked to make him rich in the future. So let's just get straight on to Warren Buffett's largest position that he has in any stock, and that is Apple. Remember, this is the portfolio of the investing company that Warren Buffett manages, called Berkshire Hathaway. Apple makes up 23.77% of Berkshire's portfolio, and they own $47 billion worth of Apple stock. Now, I hope that you guys have heard of Apple before. Their products, they're found around the world, and arguably they are the most famous brand in the world. They're obviously the company that makes phones, but they don't just do this. They make laptops, watches, iPads. They have a service called iTunes. They make money through a range of key areas. But the main way they make money is through their iPhone sales. Now the question becomes, why did Warren Buffett make the decision to have Apple as his largest position by far in his stock portfolio? And Buffett has talked about why he loves Apple stock before. First, it's because of their amazing product that Apple deliver and the following that they have with their products. Consumers are hooked on Apple devices and they're willing to pay a lot more for an Apple device compared to a device from another brand. And that all comes down to the quality of product and brand name. Buffett calls this Apple's competitive advantage or moat. Second would be the price. When Buffett bought Apple, they were selling at a great price compared to the value of the business. And even today, they're selling for a decent price. Their PE ratio is just 17. It's not as good as what it was when Buffett bought it, but the price is still nice. The second biggest stock in Buffett's portfolio is the largest bank in America, called Bank of America. So Bank of America makes up 12.39% of Buffett's overall portfolio, and the total value of this position is $24.7 billion. Bank of America, I don't really need to go into too much detail with this company. It's pretty obvious what they do. They do the typical things that most banks do: commercial banking, wealth management for individuals, investment banking, risk management, etc. Warren Buffett has been buying Bank of America stock for a good amount of time now. He bought back in 2011 when the bank was struggling after the financial crisis. But even to this day, Warren Buffett has been buying more Bank of America shares. And the main reason behind this is the price. Bank of America is just selling for a really good price at the moment and over the past couple of years. BAC at the time of making this video is selling for a price that is just under $30 and it's bringing in earnings of $2.80 per share. This gives it a PE ratio of just 10.5, which is ridiculously low compared to most stocks. On top of this, BAC pay a nice dividend of 72 cents, which gives it a yield of 2.44%. And this was one of the main reasons why Buffett bought into Bank of America, and that's for its extremely cheap price tag. Wells Fargo, a very similar position to that of Bank of America, comes in as Buffett's third biggest stock at 9.93% of his overall portfolio. Wells Fargo is a provider of banking, mortgage, investing, credit card, and financial services company. I also do not want to talk too much about the stock because the reason why Buffett bought into the stock is very similar to why he owns the Bank of America. He just bought it at a cheap price. Wells Fargo, on a pure earnings to price basis, is actually cheaper than that of Bank of America. If you look at its PE ratio, it's actually under 10, which is very low. Buffett actually owns a couple more bank stocks in his portfolio, and the main reason behind this is a cheap price compared to the value of the company. If you want to learn more about value in a company, it's one of the things that I teach in my How to Invest course. Link, of course, to that is in the description. Let's move on though. One of Warren Buffett's greatest stock buys to this day is the stock Coca-Cola, and Buffett has said this, that he will never sell a share of Coca-Cola in his lifetime. So Warren Buffett bought Coca-Cola back in 1989, and to be honest, I have no idea how he managed to time this investment so well, but pretty much since he bought Coca-Cola, the stock has shot up like a rocket. I remember reading in a book about Warren Buffett about one of the reasons why he bought into Coca-Cola stock. This book may have been called The Snowball Effect, I believe. I can't really remember. Anyway, Buffett talked about how he used to collect soda lids as a kid. One of the things that he noticed was he was collecting way more Coca-Cola lids than any other soft drink. And this is just because consumers absolutely love the taste of Coca-Cola. There's just something about that flavor and that fizz that makes it the most popular drink in the world. Warren Buffett knew this was a major advantage that Coke had over other companies, and it's a big reason why he owns so much Coke stock. To this day, it's his fourth largest position at Berkshire Hathaway and makes up 9.4% of his overall portfolio. The value of his position is $18.7 billion. Funny fact, Buffett originally paid $2.50 for his Coke stock. Now the dividend for Coke is $1.56 per year. So his dividend now almost pays off his entire stock purchase price every year. One of the things that I talked about in my previous video is with investing, you want to pick an area that you are good at and then master all of those stocks in that area. One area that Buffett is good at is the banking and financial services area. This brings me on to Buffett's fifth largest position, which is American Express. American Express is a financial services company. These guys mainly do charge and credit card products as well as travel related services around the world. Now, it's quite funny the way Buffett has been buying into American Express. Basically, whenever American Express is in times of trouble, that's when Buffett the hero comes and buys some of their stock. He did this in 1963 when they needed capital, and in the 2008 financial crisis. Buffett is always greedy when everyone else is fearful, and this is one way he buys stocks for huge discounts. Bit of a unfortunate stock that Buffett has owned lately, which is Kraft Heinz, coming in at 5.33% of his portfolio, with Buffett's total position in Kraft being worth $10.6 billion. Now, those that have been following Kraft Heinz will know that this stock has been performing pretty bad over the past couple of years, especially recently where the stock fell by about 30% due to it reporting a loss in one of their quarters. Nevertheless, Buffett still owns it, and the nice thing about Kraft Heinz is it pays a dividend yield now, based on their low price, of almost 5%, making it one of the more higher paying dividend stocks in the USA market. The next four stocks I want to loop together because they're all banking and financial services stocks. I've already explained why Buffett has exposed his portfolio heavily to bank stocks. One reason being because he understands them very well. This is one of his competitive advantages as an investor, understanding this particular sector. Also, a lot of these stocks in the sector have been selling for very attractive prices as of late. And this is why Buffett has been snapping up a lot of bank stocks over the past year or two. Buffett's Berkshire Hathaway has 3.1% of their portfolio in US Bancorp, 3% in JP Morgan, 2.2% in Moody's, and 2.05% in the Bank of New York Mellon. So, now I just want to quickly go over the next four largest positions in Buffett's portfolio, and the rest of the stocks in the portfolio we'll leave out because they're all pretty small positions, and to be honest, I don't want to overload you with information. Let's just stick to the key stocks in Buffett's portfolio. Delta Airlines is Buffett's 11th largest stock position, coming in at 1.8% of his portfolio at Berkshire. I remember back in the day, Buffett said he would never invest in the airline industry. But as of recent times, Buffett has changed his mind, and now he owns a couple of airline stocks. The reason why he owns airlines now is because there's not many of them out there. There's only about 4 main airlines in the USA, so they have an oligopoly in the airline market. Also, airline stocks have been selling for attractive prices recently. For example, Delta sells for a PE of only 8.9. Stock 12 is Goldman Sachs at 1.8% of Berkshire's portfolio, and I've already explained why Buffett owns so many banking stocks. Let's not get more into it. Stock 13 is another airline company called Southwest, and yes, I also just explained why Buffett owns airlines. Southwest comes in at 1.4% of Buffett's portfolio. And the 14th biggest position Buffett is using to expose himself a little to the vehicle manufacturing industry. He's doing this through the stock General Motors, which he bought in early 2012. But he even recently has been buying more of the stock. In the fourth quarter of 2018, Buffett increased his General Motors position by 37% in that last quarter. And those are 14 of Buffett's biggest stock positions as of 2019. The rest of the stocks in Buffett's portfolio are quite small positions, but I gotta say, there are some noticeable mentions in there. Berkshire has a position in Amazon, which they bought recently. They own Visa, they own MasterCard, they own Costco, a stock which made Charlie Munger quite wealthy. They own SiriusXM and Johnson & Johnson. But these stocks are very small positions in Buffett's overall portfolio, all under 1%. And you know, Buffett has bought all of these stocks with a very unique process. He looks at certain ratios in a stock. For example, a low PE ratio. He asks the question if management is top of the line. He looks at the moats of the business. He looks at the value of the business, and a bunch more things. If you do want to learn more about that, there is a link to my course on how to invest like Warren Buffett, in the description. But my thoughts have always been this. The best investors legally have to disclose the stocks that they invest in. So why not take advantage of this? Look at the stocks that they're buying, analyze the stocks that they own, and then make the decision if you want to own them too. Let's be honest, it's just a smarter way to invest.